For more on how technology is disrupting the finance world, I'm joined by our transportation entrepreneur, Robin Chase. She's the co-founder of vehicle communications firm Veniam, and also Zipcar, which everybody knows. It's the largest car-sharing company in the world. Robin joins us from Massachusetts. Welcome to Global Business America. Good to see you.
Hello.
Let me start with this. The taxi disruption issue, a lot has been made about that. Do you think that the media is treating this particular issue fairly?
Sure. I mean, if you think about the price of those medallions, $1 million really was because there were an inadequate number of taxis. So we had been restraining the supply, and so the price of medallions went up, and it was just ripe for disruption.
So we also heard about crowdfunding, and a lot of people said it would not work, and a lot of people said it would work. Where are we in the evolution of crowdfunding?
I think both Uber and crowdfunding, what's really happening is that we are taking advantage of excess capacity, which comes at a much cheaper cost. So if we think about how Uber started, it was people were using their own cars to drive, and so Uber didn't have to pay for a whole car. 50% of the people who are drivers for Uber drive less than 10 hours a week. So they're being able to leverage this really cheap asset. Similarly, with crowdfunding, you don't have to have a bank filled with money and big deposits. It's all of us who are now putting in small amounts of money that we have that are kind of sitting idle. It comes at a much smaller cost than traditional industries have to bear.
The ride sharing, the crowdfunding, one of the questions that's often brought up in this business model is the fact that how do you maintain quality control? Because you're going to have different types of drivers, different types of cars, and even in the crowdfunding space, there's just such a diverse group of individuals out there on these platforms. How are you able to control the quality?
There's two ways that quality are controlled. One is for an app like Uber. They ask people, they have to pass driving background tests. You know, they look at their driving record and they look at the status of the car. In addition to that, each and every passenger is going to rate that car in real time as it goes on. Whereas if you think about taxi drivers, they get their permit 3 years earlier or some earlier time, and if they've become an alcoholic since then, they're already passed. Similarly, on every single kind of peer production platform that you'll have, you will always see ratings and commentaries, because indeed we have to sort out that quality. So there's two ways to do it. One is the app sets a bar, and then in all cases, people are rated.
Yeah, for you Uber drivers out there, I give 5 stars.
Yeah.
Now let's fast forward to the banking community, because we're talking about the sharing economy for banking. How's this all going to work? Because when I deposit money into a bank, or I'm sure any of us do that, we do it because we trust the institution. How important is that trust aspect of it?
I think people will use an app only because they are trusting that app. So you're right, we still have to trust the platform just as we trusted the institution before. And again, we're seeing, so I would point to a couple companies, Prosper and Lending Club. They are a platform that people are trusting to use as both borrowers and lenders, as peer-to-peer lending. Another example would be TransferWise, which is transferring monies across borders and doing it at a much lower price. Again, each of these opportunities exist because all of the extra costs that are surrounding what banks have to bear does not have to be borne by individuals.
So somebody told me a few years ago that credit cards would be dead because of things like Apple Pay and Amazon, and everything would just be automatic. I can use my phone to pay, I can use a piece of paper to pay, I can use my pen to pay. There'll be all these ways to pay. Where do we make our bets now? I mean, who's going to win this battle?
I think the blockchain is going to win this battle. So what's underlying Bitcoin has really transformed how we can create very safe, reliable transactions done by everyone. And I actually have heard of a lot of startups that are actually trying to disrupt the banking industry as we speak, because the banking industry, as we know, is the most wealthy one because they're extracting so much value out. So it's a ripe target for this.
You mean so many fees out of what?
So many fees, huge fees.
Pay.
Exactly.
There was recently an IPO called Square, and I don't know. I'm sure you know of it. So
Yep.
Square, they process the transactions for a lot of small, medium businesses, essentially acting like the bank, if you will, and the credit card processor. Is this the wave of the future that companies are going to bypass in an odd way the traditional infrastructure?
Every way they can, yeah, because technology is now enabling us to be able to have totally different trust mechanisms and deal with lots of small parts. So we don't need those big entities with their big cost structures anymore.